All right. Hello, everyone. This is Jack Bosch speaking with another episode of our Forever Cash real estate investment podcast and YouTube show. So if you're watching this on YouTube, hello. And we have a very special guest. We're going to talk multifamily today. Multifamily syndication, multifamily raising, multifamily management, whatever comes up with an expert who has owned over 3,500 units in the United States. So we're going to get started in just a second.
Welcome to the Forever Cash Life Real Estate Investing Podcast with your hosts, Jack and Michelle Bosch. Together, let's uncover the secrets to building true wealth through real estate and living a purpose-driven life.
All right. Hello, everyone, again. So we're excited to talk about multifamily investing today, apartment complexes, multi-unit apartment complexes, medium, large, I don't know whichever size we're going to talk about. But our guest today is Vinney Chopra, who came here from India about over 40 years ago, right?
Yes.
And hi, Vinney, how are you, man?
Hi there. Hi. It's wonderful to be here.
Yeah. Wonderful. That's great. So, and Vinney has been like, he came here to this country with literally almost nothing. And then he built up from that quite an empire in real estate, in syndications, in raising funds, in education, and so on. So, Vinney, I'm not going to take steal your powder. Give our listeners a quick introduction of you and your kind of background story.
Sure, Jack. I came from India, just like you said, 40 years back. I'm a mechanical engineer. I broke a lot of toys when I was growing up. I wanted to look into the toys and see how they operate and things like mechanical toys. Became engineer. I wanted to do my master's in business administration. So I came out to Washington, D.C. with $7, sold Bible books and encyclopedias door to door. That's what converted me from a engineer to a sales guy, actually, sales and marketing. And I became like a motivational speaker. And that was a long career in that. Became a broker in California. I live near San Francisco. We got married 39 years back. We moved here into San Francisco area 39 years ago and have two children, Neil and Monica, and my lovely wife, Kanchan. And, we've been crushing it in buying single family homes all over USA. But then we found, like in 2003 or 4, I became a broker. We were wondering, how much cash flows are we getting from single family homes? There was not that much. We couldn't retire on it. So that's when I got introduced to the multifamily. So the bug caught me in 2004, almost 15 years back, never looked back. And I have syndicated 27 syndications. My big one is the $50 million one right now, which I just put an offer to buy a $33 million asset, 33 million. So $7 to 33 million now in one asset. That's where my story is, and we bought over 3,500, close to that. We have sold already quite a few, given my investors 18% to 43% per year. That's per year returns. By cash flowing and equity gains and things like that.
Yeah, absolutely. Very familiar with the game, as our listeners probably know. We have done a few syndications ourselves, 3 to be exact. In the last 2 of them in the last 9 months. We bought a $5 million asset and a $7.5 million asset in the last 9 months, and had to raise like a total of $4.6 million for that.
Yes.
Which threw us into quite a different kind of thing. But I can relate. It's quite a different kind of world than any other kind of real estate world. But I relate with you about the houses. We've done the exact same path, just I guess a few years later, which is we continue doing our land flips because they're just easy land flips and easy cash flow. But on the house side, we bought a whole bunch of rental houses, and I'm not very happy with the cash flow that they're bringing. I'm not very happy with what they're producing because it's just not, there's because you have to rely on outside management and outside contractors and outside, like every air conditioner that even has a screw loose, they're going to recommend a replacement.
Yes.
I'm not an air conditioning guy. I won't go there and look at it. Plus, these properties are at a distance. Guess what we end up doing? We end up perhaps setting a second or third property management company there, which, or actually plumber, air conditioning company there, which perhaps one of them is honest and realizes there's only a screw loose. But either we end up replacing it, or we end up having a lot of extra effort getting 2-3 companies out there. And it's just not much fun doing single family deals, in my opinion.
You're so right. You're so right, Jack. I mean, that's what caught my attention, because I said, oh my gosh, if I have 20 scattered homes all over USA, we had it in Phoenix. I mentioned to you 3 of them. In California, we had certain, and then Georgia, India, a lot of other places, Texas. But what we found was, if I could get 20 homes under one roof or 2 roofs, that's going to make it much easier. My job, I can manage 20 different residents. We never say tenants in our language, they're residents, or 50. If I got 50 residents in, few buildings on the same lot, maybe land of 4 acre or 5 acre, I can have a maintenance person. I can hire a leasing agent and a manager. So the economies of scale really caught my attention, being an engineer. So that's what we have done. And then you can value add much better in the apartments, where you are able to give special, curb appeal, of course, and then putting the cafes like we do in our communities, Monil communities. We put cafes, we do dog parks, we do tennis courts, exercise rooms. So more people are able to get great amenities, media centers. Then we can increase the rent. And then the value increases in multifamily many-fold much faster as compared to the single family.
Absolutely, yes. And we came to that same discovery several years ago, and that's ever since we have taken our personal investment strategy into the multifamily side, while of course still in our land deals. That's what we're known for. But basically we make money in land, and then we invest the money into apartment complexes for what we call forever cash, which happens to be the name of the book that I wrote.
Oh yeah, wonderful.
And so that's exactly the point. So now let me ask you, when you go into, do you have like a box that you look for? Like like when we look for apartment complexes, we have a specific set of criteria of what we're looking for. We're not doing total remodels. We're not doing total repositionings where we kick out all the residents, or where we ask them all to leave, where we then remodel the entire thing and then refill it up. That's not our model. We do a pure cash flow model. How about you? Do you have a model or 2 or 3 models, or is it just depending on the opportunity?
I'm glad you mentioned it. To be very truthful, very similar to your philosophy. I'm also with the same notion. I have been buying momentum plays, I call it. Momentum plays are the assets that are cash flowing on day one. So I have always taught my students also, and myself for the last 14 years, that I'm going to buy the properties which are 75% occupied or more. There could be value add function once I take over, but I have never done big ones where it's only 30% occupied or 0, like just empty. I've never done that. So the thing is, I go after emerging markets, which you probably also do. Mm-hmm. That's where the jobs. That's the whole mantra. The thing is to find these pockets of great places around the USA, and they're all over, from Seattle all the way. Well, Seattle is very hot now. Portland, it used to be, but then all the in California, where I live near San Francisco, not too much can be doing it. Everything is so expensive. So a lot of people talk about Texas and North Carolinas and the Floridas and Phoenix, where you are. Right there in Arizona, very nice markets are emerging. That's where we have been purchasing, So I have never done complete rehabs, just like you said. We are always looking for, I used to look for C- properties in a area, or even C+ or C properties in a B or A area. Like San Antonio, we went there to the Alamo Heights. Mm-hmm. People told us Alamo Heights has $1 million homes. It's an area. We were looking for C assets, and we bought 6 of them. over there, one after the other, one after the other. This is 2009 and 10. We sold them all. We sold them all within 4 years and doubled monies and things like that. I just sold the last one in Seguin, Texas, last year on a golf course.
Good timing, because the market is really tough right now for those who want to get into the market. Talking about that, what do you think? What do you see the market? What do you see happening in the market? Where do you see the market going?
You know, the market is, I would say last year I didn't buy any. Oh my gosh. I underwrote so much. Like you said, Jack, it has been a tough one. Lots of new investors penetrated the market quite a bit. New ones, the new ones, they didn't know much or whatever, or their gurus didn't tell them, and they paid overpricing for it. They're going to be in trouble. I never bought. I underwrote maybe 100 different ones. LOI, I put it on some, but nothing worked. But now I just see some easing of the market a little bit, and especially a little bit higher level in the B class assets, B in A or B plus or B minus in A. That's where I'm concentrating. So I see that, you know, the thing is, I also believe, Jack, that one cannot get out of the market to really make money. You got to stay in the market, talk to brokers, build those relationships, and be in the game. Because see, you never know when the market is going to have good, I mean, things happen, divorces happen, the groups, complete their 4 or 5 year cycle. They're ready to sell these apartment buildings and all those things happen. So you got to be in the market so that you can get some good fruit. Yeah.
No, I absolutely agree. And this is the big discovery. I mean, not the big discovery, but this is what we discovered when we went into the apartment complex market. That is a completely different ballgame. I always say buying an apartment complex is about 3.2 million times harder than flipping a piece of land.
Yes.
But and it's on multiple levels. So it's not negative. It's actually, if you got to know what you get into, because it's a complex business, but then the payoff is also very, very high.
It is. It's very exciting. Very exciting, which you probably already know and your audience knows, is you get paid 4 times in owning the multifamily. The first one is, of course, the acquisition fee.
Right.
You know, I was taught by the very best of the best syndication attorneys in this USA, and they've done my 27 syndication, just same attorney. I've kept them, with me. And the best part is that they taught me, they said, Vinney, you could charge 3 to 5%, my mentor told me, off the purchase price. So I've been very consistent in all my deals, 26 of them, 27th one coming up, 4%. I used to charge 3, now I charge 4. But now with the market adjusting, I want to let again your audience know we are even going lower, because you got to make the numbers work.
Right.
I've been buying 70-30, 60-40. 60 goes to the investors, 40 comes to our company as the general partner. We are doing even like 70-30 or 80-20 in the first year just to get the numbers work. And then we can change that in the second year, third year, fourth year, like that, to get that, a little bit. Of course, that's the acquisition fee. Second one is the 1 or 2% asset management fee, we call it, right? Asset management fee. That's another one. We, in our model, we also have the cash flow we give to the investors on a quarterly basis. Some people do it, syndicators do it monthly. I believe in quarterly, so that large chunk of, oh, you do too? Okay, great. This way, they just walk 4 times to their mailbox or look at their bank account and see thousands of dollars coming in there, and that's a good thing. So that's the other one. And we also take cash flow every quarter. So our company, general partners, we make cash flow also there. And then we do equity gain, as you all know, right? Once we sell the property, I just did actually one property I bought for $3.55 million near Houston 4 years back. Jack just sold for $8.5 million. $8.5 million. Thank you.
Beautiful. We have a similar deal on the contract that we're selling right now, which we bought less than 3 years ago for $3.6 million, and we're listing it for $9.2.
Oh my gosh! Wow.
Probably going to sell it in the 8.5 or 8 or so range, but yeah.
I love it. I love it. That's great. And the key thing is that the investors get great, huge returns, they tell more people and more people and more people, and they are ready to invest with you again. See, the reason I did this big deal, which is 33 million, I hope I get that, because my investors just got $10 million or so in January and February. So they're knocking on my door. They're saying, Vinney, when is the next one coming? When is the next one? So it's a good to have.
When you sell a property, do you pay it out and pay taxes, or do you do the 1031 exchange?
Good point. Very good point. See, because what happens is different thoughts are there. In our syndication, you could do drop and swap, it's called. I think maybe you know some different ways to do it, but it's a LLC that really owns the interest, right? For 4 years, 5 years. So in talking to CPAs and attorneys, and we have done several meetings together, they say that there are few specialists in this field where what they do is once you are ready to close on the deal, you change the structure from an LLC to TICs, TIC, tenants in common.
Okay.
Maybe, that will be something, I don't really promote that, but we could do it where then all the people who are my investors, they can take their gains and then use them for 1031 into their own deals. That's how it is. Or if there is a meeting of mind in the syndication model, we could cash out some of the investors who need cash, and the ones who want to stay together, we could buy another asset. But then the rules apply, that 6-month rule, 45-day rule before and all, like that.
Yeah, which makes it challenging in this market to find something.
It's challenging. That's the word I want to say, because I did do one take where one of my investors brought money in, 750,000, but it's been a nightmare because you have to run the operation separately because they own certain part of this complex now. Tick, with the tick and all that. So that's why, as simple answer is, it's better to just let the depreciation, accelerated depreciation, of course, go through the whole pass-through entity with the LLC. And that way, the investors get their K1, and the K1 reflects their distributions, but also get into effect their depreciation, accelerated depreciation, the whole tax ramification, and the property taxes and everything, because that makes it negative, Even though the property might be making a lot of profit in the year, paper loss of accelerated depreciation makes it negative.
We just bought on the apartment complex that we bought on December 19th.
Yes.
The cost segregation study done right that same week, and we got this property was able to write off $1.6 million first year. Like in December, within 11 days, we were able to write off $1.6 million.
Oh my gosh!
It's basically being split between the investors. The investors get a large portion. We get a small.
Yeah.
And so the investors got their K1 right now, and they all called us like, why do I have a $50,000 loss on my K1? And I had to explain to them, this is actually a good thing.
Exactly.
Because the property has already, the first 3 months, we've increased and net operating income by 15% in 3 months already. But you're actually saving a lot of taxes in your 2018 tax returns.
Exactly.
Because we're able to do that. And they're like, oh, and so now the wheels are spinning and people are starting to understand.
Love it.
The concept of paper losses versus real world income is.
Totally. Now, of course, because I'm selling some, I sold 2 last year. I sold 2 in January and February. Pretty big paydays, of course, $1 million paydays. But the good part is, that a lot of these investors, we have to kind of teach them too, because we are selling now, recapture of the depreciation comes in. So we have to teach them, all right, we are getting some great effects, but there will be capital gain that's going to come in 4 years or 5 years. And that's a good way to really be transparent and letting them know about it. And nobody has really said anything. They say, Vinney, you're right. I know we have to pay tax. I say, I know you got, if they're making 37% or so plus more, but in the capital gain with the, a long-term capital gain is lower percentage.
And then they pretty much paid no taxes in the year 1, 2, 3, 4.
Exactly.
And now they're paying some taxes on the end.
Yes.
Which
Yes.
if you do it as a blended rate, it's still, I made the math, it's still very, very much lower than they would pay taxes anywhere else. Yeah.
Totally.
Yeah, absolutely. Very nice. Great. So you assume you do 506Cs, right? With
actually,
only?
I've done 26 of them, 506Bs. Can you believe it?
Okay. Yeah, we do Bs too.
Yeah,
Which,
Bs
for those
also.
who are listening, the difference is that the 506B, you cannot advertise for investors on that, but you're allowed to up to 35 non-accredited investors to invest with you per deal.
Yes.
So a non-accredited investor is somebody who has less than $1 million worth of assets outside of their primary residence.
Yep.
Or makes less than $200,000 a year for the last 2-3 years, or married $300,000 a year for the last couple of years, with what they say reasonable expectation to make that this year too.
Yes.
So if somebody has $1 million sitting in the bank or in the stock market, they're credited. If they don't have $1 million, but they're making $200,000, or if they're married $300,000, and they have been making that for the last 2-3 years, they're also credited. In that case, they can invest in any kind of deal. But if you're making less than that, there is a way with a syndication followed by the SEC rule 506B, that 35 of them can invest in one deal, which is very, very exciting and very, very good for particularly because in our case, some of our students that we teach end up investing with us. And not everyone there is of course accredited.
Surely, Jack. And the good part is, they are the sophisticated, we call it, right? Non-accredited, sophisticated, who know a little bit about, investments and things like that. But up to 35, you're 100% correct. What has happened is from my zero investor 12 years back to 130 investors now, we have a mixture of, majority of them are accredited investors, but because I was just purchasing one at a time or two at a time, I just kept on doing the same. So now I have that $50 million fund, which is 50 million 506C.
Okay.
So this way, what I've done is 2-year horizon on the fund, 2-year horizon. So one-time fee on syndication. That's the best part about it. But I can stop and start anytime I want to raise money. So like I'll buy this $33 million one. I'm raising 9 or 10 million or whatever it is. Then I'm going to stop, take possession of the property, start managing it because we manage all our assets. And then I'm going to raise again, find another deal in the same fund, same paperwork, same everything. My same investors can increase now more money without filling on any new paperwork. So that's the beautiful part of the fund, which you may like to look into. And I hired.
This is actually on our horizon for this year.
Okay.
The second half of this year, over the summer, I'm planning to look deeply into that and set something like that. Most likely set something like that up. Yeah.
Oh, wonderful. If you'd like, please send me a message. I would love to introduce you to my syndication attorney. And my multifamily fund is multifamilyfund.com.
And I like the name of it.
The name of it. Yeah. I know Monil is our kids' name, Monica and Neil. We combined the two, Sure. Yeah. But that's an exciting thing. And then I got a fund administrator from Beverly Hills, because we are in California, to watch and audit the fund. And he'll be doing the truing up, it's called, truing of the investors' equities and cash flow as they come into the fund at different points. So just kind of
obviously there's a lot of accounting in the background, because somebody who joined the beginning needs to get paid, and then if they increase their amounts, they needs to change. So there's a lot of flow of needs to accounting in the background to make sure that everyone gets paid the right amount at the right time.
Yeah, that's so true. So true. Yeah. And that's why it took me some time to interview a lot of CPAs and attorneys. I like to understand myself as being the CEO of the company. And then we did, even my syndication attorney, she was with my calls, without charging me any money. And we were able to perfect the whole system, which is exciting.
Wonderful. Very nice. Very nice. That's very cool. It's very exciting to hear. Great. So now you also you say you're almost like a motivational speaker. So what do you do in that end? And I saw on your website that you have
Thank you.
a youth program too. Tell us a little bit about that.
Thank you. My motivation speaking comes from, I've been a product of all the great mentors like Jim Rohn, of course, Stephen Covey's, and, I can go on and on, Tony Robbins and, Jack Welch and Dyers and, all of them, right? Lots of different things. So I've been also doing motivation speaking in front of my audiences. I've given over 10,000 speeches.
Oh, wow.
And really motivated them to point of action, to goal set, to think about rejection in a different way, to really look at the positivity. I've always lived my life with a lot of abundance nature. I've not really looked at it. When I came in $7, I had to make it or swim it right into the ocean.
Right.
So that is the attitude I have. And that takes you to a very big height. If we take the barriers out, because a lot of us have those barriers between our ears, right there, and that's what limits us. So I believe in law of attraction. I believe this book, Secret. A lot of people do that. 24 hours. Secret is working. The antenna, we all are like transmission studios, we call it,
Mm-hmm.
Whatever energy and the message we're going to send out into the universe, cosmos, other people are going to get attracted. And if we say to ourselves, I really want this so badly, and you have to have that commitment, that burning desire. I really believe in daily massive action. I do believe in writing a lot of goals, but I hate it when people show me like a 10-page, plan. Okay, that's my life plan. I said, okay, tell me, why do you want to, you just put everything on one page? Just put in one page what you want to accomplish for the last 5 years. You tell me in one page, and then you look at it and show me what the progress you have made. Don't tell me all these different things you're going to do with it.
The thing about the secret, I love the secret, but what a lot of people misunderstand about the secret, which you obviously just pointed out, is that you can't just sit there and wish a new bicycle and it shows up. You got to wish a new bicycle. Now, if the universe, let's say, the antenna is out, the things move, but what is going to happen is the opportunity for you to earn that bicycle is going to come.
Yes.
Right? So you need to still take action. You need to do massive action, as you said, but we call it manifesting. So we are like literally living in a manifesting world. But what you set out there, I mean, we just recently moved to a new house.
Okay.
So in the process of moving out of the old house, we found all kinds of different things, vision boards, goal lists, and things like that. And the fun thing about it was that almost everything on those lists had been accomplished. And
awesome.
It had been accomplished by writing them down, and then by them sitting there and then sitting in the back of your mind, and then us taking action towards them. And things after things happened. So there's something to be said about writing them down and making them conscious, because then your subconscious mind starts taking action. You start materializing it. But you can't just sit there and wait for the world to bring them to you.
Jack, you just hit the nail on the head. A lot of people say, I have goals, I have dreams and goals. I said, are they written down? I mean, that's why 87% of the people in the universe don't achieve a lot of goals, because they don't write them down. Only 13%. Statistics say, I don't know what the new, if we do another Harvard study, what will that be? But the key thing, what you just said, is written down goals and looking at them daily, weekly, morning, evening. The thing is, you got to be passionate and have that burning desire to move from point A to point B, just like you said, manifestation, and then come with a game plan. See, I believe yesterday happened. Whatever happened yesterday, you can't change it. I cannot even change 30 seconds. That's gone. Let's talk about 30 seconds you are in right now, and 30 seconds that is going to be next one. So taking massive action through a good, solid game plan and rewarding yourself. You got to reward. See, the thing is, a lot of times people beat themselves up for not accomplishing much. but we need to reward ourselves and say small steps get us to the next level and the next level and the next level. And we need to really introspectively, just like you said, subconscious and conscious. Subconscious is 24 hours working. It's taking the picture like a movie reel, everything happening in our mind and also surroundings and everything. It doesn't know anything good or bad. It's going to always keep that into that computer in our mind. The biggest thing is that we need to concentrate on the present. Power of Now, Eckhart Tolle's book. I love that book, Power of Now. And the good part is, we got to be looking at what's the best year. And what's the Alan Lankin's book, How to Control Your Time, Control Your Life. I picked that up 35, 40 years back. That changed my life, because what's the most important thing right now, what I'm doing? If that's not the most important thing, a lot of us spend so much time in a day, A, B, C, D, E, F, G tasks. We forget the A's and the B's. Right. But we get so much stymied and crucial, all these, stressed out and what's the word? We get, distractions are there. You have them, I have them, everybody has them. If you're growing as a company, as a CEO and whatever life, you will have distractions. But we got to find time where you say, hey, I'm busy right now. And that's your time, thinking time, I call it.
Thinking time and time to spend, as you said, on the A and B task. Because
yes, A and B
applies in everything. So 20% of what you do affects, brings you forward 80%. That's 80% of the progress.
Exactly.
So you got to keep looking at the 80, and you do that obviously. Keep looking at what is the 20% that you need to focus on, and then ideally find somebody else to do the other 80%.
Exactly.
So you can just focus on that.
Totally. Virtual assistants. I have like 4 or 5 virtual assistants working for me at very reasonable cost, because I'm not good at a lot of things. So it's good to delegate. So if we can really learn the method of prioritizing our tasks and life, and also delegation, those are the 2 things which can give us abundance of time and energy. And the other best part is your audience. I'd like to say, at the age of 66, I'm 66, I'll be 67 coming up in August, but I have a passion and the vision board for next 25 years. I want to so much accomplish. A lot of people are now saying, I'm retired, this and that. You die. When you are not thinking and stimulating your mind, you got to die.
You're not growing, you're shrinking.
You're shrinking, exactly. You're never same. You're never same, health-wise, vision-wise, all that. But the best thing is that you got to have that burning desire and that passion. I would love to say, I know we have a little bit of time, about the Youth Academy. I am so passionate. Not too many people in this country and around the world in the high school or junior high or elementary school talk about success or finances and different things like that. So my thinking is a little bit at a very small level, how to teach high school students, or even when they get into 14 years of age or more, where they can do their own company, they could form a company instead of just wasting time listening to all these things and watching TV and all that. Have a business so that they can start thinking, and by the time they're in college, to own a duplex. So that's not my passion. If we can teach them real estate at a young age, early age, and them to really save money, because the saving part is a huge one, and to be able to live rent-free at the age of 20 or 22, and then build their career from there, always have the real estate angle very early in their life. I think there is so much to say about the real estate is going to be here. Of course, different forms are there and all that. But the biggest thing is to introduce them the concept of success, entrepreneurship, positive energy, commitment, working hard, and living life to the fullest. If they can learn that at the age of 18, I think when they'll be 38, they'll be doing wonders in the world.
Yes, absolutely. Wonderful. That is, I think there's no better way to end this podcast than with this motivational message speaking about the youth. So, Vinney, how can people get a hold of you?
Surely, I'm all over the internet on Facebook, LinkedIn. Just say Vinney Chopra, V as in Victor, Inney, Chopra, like Deepak Chopra. He's a great, speaker and great motivator, everybody. I'm just very small guy right here in San Francisco. And, Vinney Chopra. And if they would like to learn a little bit about my philosophies and things like that, they could just text the word learn, 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 to 474747. So this way they get to my mastermind inner circle team. We'll write back to them, text them back, get their information, and then see what they would like. How can we add value to them? That's what that is. So.
Wonderful. All right, thank you very much. So
thank you.
With that, that was a great firestorm of knowledge. We talked about multifamily, we talked about syndications, we talked about funds, we talked about youth, we talked about manifesting, we talked about lots of different things. I loved it, absolutely. Thank you so much for being on the show, Vinney. Really loved it. And for those of you who are watching us on YouTube, make sure you put the thumbs up, you put a comment below, ask your questions below. We make sure we pass it on. And if you're watching or listening to this on iTunes, make sure you give us a 5-star review and leave a comment below too. So with that,
I want to thank you, Jack, and I want to congratulate you on running such a great podcast show and the whole business. And God bless you. You bring such great, I listened to some of your podcasts, and fabulous content, and all the blessings to you and all the best wishes to you.
Thank you. To you too. Thank you very much. With that, we see you next time.
Enjoyed this episode? Then make sure you like, subscribe, and post your comments and questions below the video. We're looking forward to hearing from you.